Ladies and gentlemen, welcome back to the channel. And in today's video, I'm going to be talking about things you should include in a business plan for companies that plan on an initial public offering. So if you plan on staying private, this video is probably not for you. But if you plan on going public or having an IPO, this business video is for you. Okay, I'm going to go over 10 things that you should probably include in your business plan that otherwise wouldn't be included if you were a private company. So my name is Nicholas Coriano, went to business school, went to law school, wrote over 2,000 business plans, and every Friday I release a video here on YouTube or some other social media platform, wherever you're viewing this, trying to help entrepreneurs, business owners, executives uh, make their business plans better, pitch decks better, win government contracts, and just general business tips, hopefully, that help grow and scale your business. So, again, in today's video, I'm going to go over 10 things that you otherwise wouldn't include in a business plan unless you're going to IPO or have an initial public offering. So, let's get to it. Number one thing that you should include, and these are in no particular order, but number one, IPO strategy and timeline. So this could include your rationale for going public, your projected timeline for IPO milestones, and your IPO structure. So how are you going to go public? Are you going to do a direct listing? Are you going to do a traditional IPO? Are you going to do a SPAC? Or are you going to do a reverse merger? These things should be included in a business plan. Otherwise, they wouldn't be included in a business plan, right? But if you're going public, you want to tell the investor or the reader why. So what's the rationale? Why are you going, right? Is it for exit liquidity? Is it for expansion capital? You want to give them the timeline and your IPO structure. So how are you going to go public? Are you going to buy a shell on the OTC, reverse merge into that, and then uplist? Are you going to do a direct listing, a traditional IPO, a SPAC, or a merger combination? The second thing you want to include in a business plan if you plan on going public is corporate governance and compliance. So you want a section for corporate governance and compliance. This could include your board of directors composition and their qualifications, independent audit committee or governance policies. This can also include how you're going to comply with SEC regulations and reporting requirements. This can also include internal controls and risk management strategies. When you go public, you're going to need a board of directors on a NASDAQ or New York Stock Exchange listing. On lower tier OTC listings, you probably won't need that. But in general, you want a good board of directors and corporate governance in play. So make sure you put that team together before you go public, obviously. And in your business plan, you want to include that section. A little pro tip, the better qualified your board of directors and your independent audit committee are, the more attractive it is to investors and the more attractive it is for an IPO. So if you have other successful entrepreneurs on your board of directors or executives or business owners on your board of directors, it's going to read better to investors. So make sure you include a section in there for corporate governance and compliance. The next section you want to include, this is traditionally included in a regular business plan, but it's use of proceeds for your IPO proceeds. So a lot of times people raise capital in a business, and this is always included in a business plan. But here the differentiator is that you're raising capital through the IPO. So after the IPO, you're going to get capital on a traditional IPO. Some of these IPOs, like a reverse merger, it may not work like that. But in a traditional IPO, you're going to raise capital in that IPO, and you want a detailed breakdown of how those funds that you raise will be allocated. Is it going to be for expansion? Is it going to be for R&D? Is it going to be for acquisitions or debt reduction? You want to really put that out there and in detail show how you're going to use those IPO proceeds. And then in addition to showing how you're going to use the IPO proceeds, you want to show your expected return on investment for the IPO proceeds. This is important because people that are going to buy your stock pre-IPO want to know, where's this going, right? How are these guys going to spend this money, and should I keep the stock after the IPO or sell it? So that's the third thing. Number four, market and investor positioning. There should be a section in your business plan for market investor positioning. This should include an investment thesis and why institutional investors should invest. So traditionally, when you're about to IPO, you're going to have a lot of institutional investors, family offices, venture capital, investment banks that are going to invest. This investment thesis has to be strong because institutional investors are going to poke holes in your business plan. Most investors are going to poke holes in your business plan, but definitely institutional investors who are usually more professional and prolific in their expertise and analysis of business plans are definitely going to poke holes. So you want a thorough, comprehensive investment thesis and the why, right? Why should people be investing in this? The other thing you want to include in this section is a comparative analysis with publicly traded peers. So you want to show, look, this is what we do. If you're in a sector for social media, right, and you've launched a awesome social media site, then you want to put yourself against Snapchat and Facebook and these other peer groups that are already traded publicly. That way, a potential investor can say, well, these are what other companies that are traded publicly are trading at. They're trading at this multiple. They have this much volume. These are the benchmarks that they have. So do a matrix, a competitive matrix of other public companies that are similar to yours, and show where you plan on fitting in there, right? What is your stock price going to go public at? Where do you think your revenues compared to theirs? Maybe your user count, right? If you're a social media company, maybe your user count. Um, you just really want to do a comparative analysis to other publicly traded companies, your market cap, right? These are all things that you want to compare. The next thing you should include in that section is public market valuation expectations and stock performance drivers. So, what do you think that the public market valuation is expected after the IPO, right? So, it's usually a multiple of earnings or a multiple of asset, right? There's a ton of ways. I have another video in my YouTube catalog here about how to value a business, but this goes back to that comparative analysis, right? What does the public market perceive that you're going to be expected to be valued at? And then what are the stock performance drivers? What is going to drive the stock up or down, right? Is it going to be user count? Is it going to be revenue? Is it going to be another metric that investors or potential investors can look at and say, okay, this will drive the stock price up, right? Is it going to be a low market cap or a low share count, outstanding share count? These are all things you want to include in there. And then a strategy for engaging analysts, institutional investors, and retail investors. One of the big differences between being a public company and a private company is that there's these analysts that come in and they're going to either analyze your stock or they're not. A lot of public companies live and die on whether analysts cover their stock, right? Because if analysts aren't covering their stock, usually the big banks aren't investing in their stocks because they don't have any transparency or someone that can say, hey, look, this stock should be valued at this, right? So you need a strategy for engaging these analysts, these institutional investors, and the retail investors, which are really three separate columns, right? Engaging an analyst on the buy side or sell side from a major investment bank is not the same strategy you're going to have to get in front of institutional investors. And it's definitely not the same strategy you're going to have for getting in front of retail investors. So you want to make sure that you get all of that done. Institutional investors are the guys that are going to buy blocks of stock when the stock is dilapidated or doing well. Retail investors are usually the ones that give you a ton of volume, and analysts are usually the ones that allow institutional investors or retail investors to make an informed decision by putting out strong market research on your company. So all of those people need to be engaged, and you need to have a strategy included in your business plan to engage those people. All right, number five, you want to include in your business plan if you're having an IPO or you plan on going public, you want to include in your business plan a section for financial transparency and reporting. So, how are you gonna report your financials and what's your strategy there? Now, this is as simple as, hey, look, we're gonna have a CFO and a CPA firm, but you want to list this out because when you go public, it's a major criteria, right? So you have to have compliance with GAAP. You have to have compliance with, your CPA or your CPA firm can't just be a regular CPA firm. It has to be a PCAOB audited CPA firm, and then you need an auditor, right? So some of the things to include in this section is GAAP compliant financial statements audited by a PCAOB registered firm. You probably want to state that in there. Adjusted EBITDA or non-GAAP financial metric disclosures, projected earnings per share, historical financial trends and key performance indicators, or KPIs as they're called, and liquidity and capital structure post IPO. These are things you want to include in the business plan because people want to know. Generally, you're not doing a earnings per share analysis in a business plan, but if you're going public, you want to include that in there. Six, Exit strategy for early investors. This is a section you want to include in a business plan if you plan on going public. A lot of times, if you're you're writing a regular business plan, you don't always include this. If you're getting a bank loan, you don't really need to include this, right? You're just paying back the bank loan. If you are getting investors, sometimes you include this, but definitely if you're having an IPO, you want to include an exit strategy for early investors. Many times, that's the purpose of an IPO, is to get liquidity for early investors. But some key considerations in this section that you want to talk about are: what are the lockup period for existing shareholders? So how long do they have to hold the stock before they can sell it? Any restrictions on selling the stock or potential dilution effects? So are you telling people that they can't sell the stock for 6 months or 2 years? Is it different for employees than it is for investors? And then what is the effect of that dilution, right? Are you issuing more shares later that will dilute the stock? You want to be transparent about that. And then any share buyback plans or dividend policies post IPO. So if you plan on buying stock back later, or you plan on issuing a dividend immediately or not issuing a dividend immediately, you want to state that to investors as part of your exit strategy for early investors. Number seven, legal regulatory legal and regulatory compliance and considerations, right? So in this section of the business plan, you want to go over how you're going to address some of the legal compliance and regulatory considerations. So this can include SEC registration process and Form S-1 filing preparation. This could include Sarbanes-Oxley Act compliance, and risk disclosures specific to public market investors. So, for example, stock volatility, regulatory risk, if you have the potential for a class action lawsuit, right? Any kind of risks that are inherent in your business model or in a traditional IPO, reverse merger, or SPAC, you want to list that in the business plan. So that's legal and regulatory considerations. You want a section for that. Three more sections. Hang tight. Number 8, an investor relations strategy. Oh, this is my favorite. Running an investor relations firm for the last 12 years is definitely something that many people that are going public miss. The investor relations strategy section of a business plan for a pre-IPO business should include a few things, right? But really, it should include your overall IR strategy before the IPO and after the IPO. And you want to tell investors this so they understand, or and that you understand, hey, look, we need to get in front of investors. We need to market ourselves as a public company and not just a regular company, so investors know that they can trade our stock after our IPO. So some things to include in this section could include a roadshow and pre-IPO marketing plan. So how do you plan on getting out there to institutional investors and retail investors, right? An ongoing investor communication strategy. So how are we going to communicate with institutional investors, retail investors, financial analysts, so they understand our story, right? There's many businesses that go public that are complex. It's not as easy as, hey, look, we sold 100 widgets and it cost us, $10, and we sold them for 20. A lot of times it's very complex, so you need a strategy in place to make sure that investors are communicated with thoroughly, that they understand every aspect of the business and they can value the business correctly. And then media and PR plan for public markets, right? These are all things to include in your investor relations strategy. And that's really just a small kind of framework of what to include in that section. But you want to make sure that your reader of the business plan understands, hey, we know we need an IR strategy, and this is what we plan on doing. Number 9, underwriting and capital raising strategy. So this can include how you're going to select investment banks and underwriters. What's your pricing strategy or expected valuation range when you do go public? And is there a syndicate structure and allocation of shares? So are you going to issue all the shares at the same price? Are there going to be, tiers of prices where, the first round gets in at a certain price and the second round gets in at another price and the third round gets in at another price? Are you going to have one broker dealer investment bank sell all the shares, or is it going to be a syndicate? Are you going to have a group of investment banks? Who are the investment banks? Who are the lead underwriters in the deal? This is all something that you want to include in a section that I put here as underwriting and capital raising strategy. And then how long is it going to take, right? Are you going to issue any preferred shares? Anything in the realm of capital raising or underwriting, you want to put in the business plan, because most astute investors understand that the devil's in the details, and there could be dilution there. There could be mispricing there. There could be issues with getting out of the position later. So you want to be as transparent as possible in your business plan about your underwriting and capital raising strategy. And last, number 10, the things to include in a business plan for an IPO is public market risk factors. Market sentiment. This can include market sentiment, economic conditions affecting the IPO timing, right? Competitive risks in the public company environment, liquidity risks and stock price volatility post IPO. These are all things that are a risk that wouldn't be normally a risk for a private company, but are definitely a risk for a public company. Keep in mind that these 10 things that I just stated, and I'll state them again, are included in addition to what you would include in a normal business plan, right? So, a normal business plan, you want the cover page, um, definitely a confidentiality agreement in a pre-IPO business plan, table of contents, so people aren't, fumbling around the business plan. They know where to find whatever they have to find, and then the basics: executive summary, company description, market research, industry analysis, a SWOT analysis, management and organizational plan, marketing plan, the financial projections, and the conclusion. Those are the basics of a business plan. But then, if you're having an IPO, include these extra sections, which are these 10 sections I just stated. Number one, an IPO strategy and timeline. Number two, corporate governance and compliance. Number three, use of proceeds. Number four, market and investor positioning. Number five, financial transparency and reporting. Number six, an exit strategy for early investors. Number seven, legal and regulatory considerations. Number eight, an investor relations strategy. Number nine, an underwriting and capital raising strategy. And number 10, public market for risk factors. So if you include all of that in a business plan, you're going to have a pretty good comprehensive business plan for your company to IPO or go public. I hope this was helpful. If you like the video, give it a thumbs up. If you like the channel, subscribe. If you have any other questions, put it in the comments section below. Any other advice or things that you've run into, put it in the comments section below. And next week, I'm going to go over, or in my next video, depending on when you're watching this, I'm going to go over the top 10 things to include in your financial projections if you plan on going public. I hope this was helpful. I'll catch you guys on the next video.